The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday. Welcome to another edition of Breakout Investing on TFNN, coming to you from a cloudy, rainy, dreary day here in Southern California, but not too bad a day for the market here. We'll get into that in just a little bit. First of all, some house cleaning items. The number, if you want to call, give me a call, talk to me about this market. Toll free, 877-927-6648. You can catch my show every day on TFNN from 3 to 4 Eastern. If you can't listen live, you can always get it as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. Just open your smartphone browser. Excuse me, type in tfnn.mobi, and you can listen to the stream that way as well. And if you want to look at charts live right along with me, you can do that on Tiger TV. If you're sitting at your PC, the show is carried live on Channel 1. It is archived on Channel 13, and Tiger TV is also viewable on your handheld device as well. Folks, don't forget to check out the homepage of tfnn.com. First of all, you can get a free 30-day trial to Ultimate Growth Stocks, my newsletter model portfolio. Just click on the newsletters tab and then investment newsletters. You can read all about Ultimate Growth Stocks. Been putting money to work cautiously in recent weeks in anticipation of some continued strength between now and the end of the year. We'll see how that works out. And we've got a great Tiger Dollar promotion going on. Just started. Basically, Tiger Dollars, you really get bang for your buck because you get a match depending on the amount of Tiger Dollars that you purchase to take advantage of some great items at the TFNN.com website. But if you purchase Tiger Dollars, we'll donate up to 10% of your purchase price to the Salvation Army for the holidays. Sign up by December 19th and get a 25% bonus match on any amount over $500. And if you purchase $1,000 or more, we'll donate 10% of your purchase price to the Salvation Army. Less than $1,000, we'll donate 5% of your purchase price to the Salvation Army. So be sure to check out all the details right on the homepage of TFNN.com. Now let's talk about the markets. NASDAQ Composite looking to make it 8 out of 9. Nice rally off the bottom here. We did get a mild buy signal from the market last Friday, half day of trading, one day after Thanksgiving, and it was a mild buy signal at best, but it seems to be working so far. Notice that the NASDAQ is coming pretty close to a potential resistance level here, the 50-day moving average at 30.27. Wouldn't be surprised to see a little bit of a shakeout here after 8 gains, what looks like 8 gains in the past 9 trading sessions. And you know what? Look at all the gains pretty much since the lows were put in here. Every day the NASDAQ has closed higher, it has finished pretty much at its session high. Isn't that uncanny? See the big reversal down here, closes near its high. Every single day, close near the high. So it does tell you that there are some buyers around here, not much selling pressure. But again, the NASDAQ Composite approaching what could be a resistance level here. It's 50-day moving average at 30.27. Right now, it is up close to 21 points on the day to 3,012, back above its 50-day moving average. And the S&P 500 will see the benchmark index also up near its high, basically in the top half of its trading range, but a similar situation to the S&P 500, approaching key resistance here, the 50-day moving average at 1422. S&P 500 last trading at 1416, so it's about 6 points. 6 more points to go before it gets to this potential resistance level, but the S&P 500 up a little more than 6 points on the day to 1409. And finally, we'll check in on the Dow Jones Industrial Average. It is up over 33 points to 13,018, trying to reclaim its 200-day moving average. It still has a ways to go to get back up to its 50-day line, which is at 13 13,209 for the Dow. Been hearing a lot of dividend announcements. Today it was Dow component Walt Disney raised its dividend by 25% to 75 cents a share. I believe this is an annual dividend, not a quarterly dividend, but raised its dividend by 25% to 75 cents a share, payable December 28th to shareholders of record December 10th. Nice upside reversal for Disney yesterday. It is extending gains today, up another 1.2% to 49.77. So Disney working on 2 straight days of gains. Taking a look at volume today. Yesterday on the NASDAQ, pretty much average at 1.68 billion shares. And let me just get a volume read here from investors.com here. NASDAQ volume right now tracking about 5 to 10% higher than what we saw yesterday. So it is good to see a little bit of conviction behind the volume. This is not a market that to me is under meaningful accumulation here, but that doesn't mean we can't rally until the end of the year. So would like to see higher volume up days from here, lower volume down days. It's very simplistic, but that is the type of price and volume interplay that you want to see, that points to a market that is at least under mild accumulation. Not seeing massive amounts of accumulation here, but certainly seeing a lot of growth stocks acting better, no question about it. So NASDAQ volume tracking higher than Wednesday. NYSE volume not so much. It's tracking pretty close to what we saw on Wednesday, which was just over 700 million shares. The yield on the 10-year note mostly unchanged today at 1.62%. The 10-year note is trying to snap a 3-session losing streak. The 30-year bond down slightly to 2.79%. It has been headed lower for 4 straight sessions, so both the 10-year and the 30-year trying to snap modest losing streaks today. We'll see how that ends up. U.S. dollar under a little bit of pressure today, not by much. Last trading at 80.23, down 11 ticks. Gold snaps a 3-session losing streak, up $10.70 to $1,727.20 an ounce. Crude oil up $1.58, 1.8%, settles at 88.07 a barrel. Well, you've got, let's see, it was Tuesday. We had Senate Majority Leader Harry Reid not saying positive things about, fiscal cliff talks. Market didn't like that at all. We saw a higher volume decline in the major averages, what's called a distribution day. Immediately called the viability of this rally into question. Then yesterday, Obama and Boehner speak, and you got some, reasons to be optimistic, and the market liked the sound of that. You've had a nice reversal and close near the highs, so that was good. And then today, John Boehner comes out and basically says that Democrats are not serious about spending cuts, no substantive progress being made. White House needs to get serious, and the market didn't like the sound of that at all. But so far, not too bad a day for stocks. I mean, it's just going to go back and forth. You're going to get good headlines. You're going to get bad headlines. You're going to get whipsaw, back and forth market action. But as long as the growth stocks that I'm watching here continue to hold up well, and several names in my model portfolio that I have initiated positions in the past 7 to 10 days continue to hold above buy points, and the charts look pretty good. So I'm going to stay optimistic that this rally could amount to something. But headline-driven market, really anything can happen here. It's not the time to be super aggressive with new buys, and I haven't been. I've been just kind of nibbling at some stocks that I think have potential, fundamentally, technically strong, institutional quality names, and we'll see how it goes. So let's take a look at shares of Kroger. Really nice technical breakout here for Kroger, supermarket chain. They also operate Fry's, Food for Less, and Ralph's. Ralph's a big supermarket chain out here in California. But Kroger really having an outstanding day, up 5.2% to $26.36. Still within buying range, actually, here. A lot of people don't like to buy gaps up in price, but this stock is clearly under accumulation today, and there are countless examples of stocks that gap up, and they just keep right on going. You say, oh, why didn't I buy on that gap up? I felt like I was chasing it, but demand very, very strong today for shares of Kroger. They reported earnings up 39% from a year ago. Sales 46 cents a share was the number, up 39% from a year ago. Sales were up 6% to almost $22 billion. You got a nice dividend yield with Kroger, 2.3%. And just a good solid technical breakout. And you know what? I don't think you're chasing here. Buying a heavy volume breakout like this, clearly a stock that's under accumulation, healthy technicals ahead of earnings. This one could easily see higher prices ahead. We had a lot of same-store sales data from many of the nation's retailers today. Limited brands looking interesting here. Not seeing a whole lot in the retail sector. But LTD making a nice move off a recent low of 45. The stock is recently trading around 51.47, up 1.3% on the day. Pretty good volume behind its recent rally here, along with the broad market. Same-store sales up 5%. That was better than the consensus estimate of 3.1%, approaching a swing point quickly here of 52.20. And at 51.47, it not too far from a technical breakout here. Now, in a technical pattern like this, where you have a pullback from, say, 52 down to 45, and it's starting to work its way higher, you can see a kind of a long, gradual pullback here between September and basically end of November, and it took a lot longer for the stock to build the left side of its base than it did to build the right side. Now, that's not surprising, because this market rally, it's really been a incredible bounce that we've seen in the major averages. So what I would expect limited brands to do here, sometimes it's possible if there's enough volume and there really is institutional buying going on, this thing could really try to take out its recent high of 52.20. It's only got another 75 cents to go to do that. But what would be more ideal is for the stock to see a little mild shakeout here, and that is what when a handle area forms in a cup with handle base. This is a stock that's up 8 out of 9 out of 10 sessions, something like that. So you get a little low volume pullback, a little bit of profit taking, and that could pave the way for a technical breakout. So in the retail sector, limited brands looks pretty strong here. Bath and Body Works is one of their major brands, and also Victoria's Secret. Target, not so lucky. Their same-store sales growth was disappointing, down 1% in November. That was below the company's forecast of low single-digit growth. The estimate was for same-store sales growth of 2%. Target rallying back off its lows. It hit an intraday low of 61.19, but it is back up to 62.70, down 11 cents on the day. So Target showing some resilience, but still looks like a stock that's going to wants to base and consolidate gains for a while longer. Breakout Investing on TFNN, folks. Ken Shreve with you. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Eight 877-927-6648. That's the number to use if you want to give me a call. Talk about this deviant market. It's been a deviant market for some time. I know I've been talking this week about a sneaky follow-through day, sneaky buy signal that we got from the major averages the day after Thanksgiving, almost a week ago last Friday. Actually a pretty constructive day for the market on Monday when people came back from vacation. We had a nice close near highs. Not such a great day Tuesday. We had a distribution day, but Wednesday, volatile session, finished near highs. And today, more gains, but we're kind of bleeding a little bit into the close here, but not by much. Dow still up 25.5 points to 13,010. NASDAQ outperforming, up 18.5 points to 3,010, still back above that 3,000 level, and the S&P 500 up close to 5 points to 1415. All right, same-store sales, talking about limited brands, could be on the verge of an upside breakout. Very well-run retailer, better than expected same-store sales there. Not so good at Target. Macy's as well. Some of the department stores came in below expectations. The story here for November was softness during the first half of the month and strength in the second half of the month, and that was Hurricane Sandy related, but Macy's having a tough day today. Down 4.1% to 38.70. A lot of sellers in this stock in 3 out of the past 4 trading sessions, but Macy's same-store sales down 0.7%. The estimate was for a gain of 1.5%. Nordstrom, JWN, another upscale department store. Nordstrom down 1.7% to 54.29. Same-store sales there down 1.1%. Estimates were for a 4.5% gain. Among the discount retailers, TJX, Ross. TJX looks to be the much better chart here. Let's take a look at TJX. They, of course, operate TJ Maxx, Marshalls as well, but TJ Maxx has been back above its 50-day moving average for a few days now, up just a nickel to 44.09. Same-store sales, they're up 3%, a little bit below expectations, but relatively speaking, pretty good same-store sales data from TJX. 3% gain. Expectations were for a 3.6% gain. Ross stores up 2%. Same-store sales estimate was for 2.8% growth. But you can see the different charts here. TJX, not a bad-looking chart. Ross stores, not nearly as much. Has really been hit hard by selling. Has been, rallied up off its lows with the broad market, but still faces some probably pretty stiff resistance if it can get up to that 60, 62 price level, which isn't out of the question, but I'm not sure how much higher it's going to be able to get after that. And finally, the Gap, GPS. I always thought GPS was sort of a strange ticker symbol for Gap. GPS would be maybe something like Trimble Navigation or Garmin or something like that. But GPS is Gap, and Gap under a lot of pressure. Another stock that looks like it's ready to base and consolidate gains. Not expecting a technical breakout here anytime soon, but Gap down $1.47 today, 4.1% decline to 34.35. Same-store sales up 3%. Now, Gap has been a specialty retailer that has really been executing beautifully in recent quarters, and has been, as you can see from its daily chart since July. July has made a tremendous move. Now it's just basing, pausing, consolidating gains. Let it base for a while. We'll see if new buyers come into this name sometime, but probably not for a little while here. I'm just going to build a base, and that usually takes several weeks to do. Final disappointment in retail was Kohl's, KSS. This stock is kind of a mess here. Same-store sales fell 5.6%. The estimate was for a gain of 1.9%. So it was a huge mess. Stock paying the price as a result, down $5.55, almost 11% decline for Kohl's. Last trading at 45.60. You can see how its 50-day moving average in recent weeks has turned into a resistance level. Economic data today, we had weekly jobless claims down 15,000 to 395,000. Nice to see claims below that 400,000 level. The second estimate to third quarter gross domestic product came in at 2.7%. Mostly in line. I saw an estimate for 2.8, but 2.7% growth, not bad. The prior estimate was 2%, so pretty much in line. We also had the National Association of Realtors said pending home sales rose 5.2% in October, up 13.2% from a year ago. Tomorrow, personal income and spending for October, and the Chicago PMI. All right, we're going to talk about some earnings reports when we come back. We'll do that in 3 to 4 minutes. Stick with me. Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Wanted to check out Pier 1 Imports. I really like this store. This is a fun place to shop. The stock right now down 64 cents, 3.2% to $19.58. The company earlier today came out with preliminary earnings ahead of its earnings report on December 13th. Pier 1 is a specialty retailer of imported decorative home furnishings, but they said earnings should be around 25 cents a share, up 19% from a year ago. Sales up 11% to $425 million. They also said same-store sales right now up 7.9% in the quarter. That's a pretty good growth. Said if not for Hurricane Sandy, same-store sales would be probably up a little better than 9%. But investors not real keen on that news. Pier 1 has been a big winner in the market. Started a nice move in late July from about 15, 16 bucks a share all the way up to 21. It is another stock that is basing here, consolidating gains. So you've got basically two groups of stocks in this market. You've got stocks that are basing, don't look like they're going to try to move anytime soon, and then you've got a lot of stocks that are moving, and that is what makes me optimistic that this rally could have legs. And I talked about this whipsaw market. Good headlines out of Washington, bad headlines out of Washington. We've got earnings season that is pretty much over, so the focus now is just going to be on Capitol Hill and what each daily press conference, whether it's Boehner or Harry Reid or whoever how the market interprets what they're saying. So it's probably going to be back and forth. But if we can keep the price declines in the indices on a tight leash and some tight orderly declines, and then see some days of accumulation in the major averages, I think that would overall be a good sign. So again, 8 up days out of the past 9 sessions for the Nasdaq, and you've got some nice setups out there. And wanted to take a look at some of them here. How about Regeneron today? Regeneron Pharmaceuticals. We mentioned this stock yesterday, day before, I believe, how it was really holding on to gains after a big move. The European Union recently approved its drug Eylea as a treatment for wet age-related macular degeneration. It's the leading cause of blindness in the elderly population. The thing about Regeneron is that it is extended over 166. It had a breakout over 166 a couple of weeks ago. Good volume in the stock, definitely under accumulation. I'm very hesitant to chase the stock up here, but it is up another $12.88 today, 7.4% move to 187.79. So a stock under accumulation, a very high quality drug maker, no question about it. Big earnings and sales growth in recent quarters, bright growth prospects. There's a lot to like about this stock, but the time to buy was when it broke out over 166. The train looks to me like it's left the station here. Good high quality name here. Has some other nice looking charts here. HTZ. Haven't talked about this name. Hertz Global Holdings. HTZ. This is a stock that was higher at one point today, only up 9 cents now to 15.66. But this is a stock yesterday. Nice technical breakout for Hertz, breakout over 15.29. And I think I have a weekly chart here that will give us nice perspective for Hertz's breakout. And yeah, you can see the swing point here of 15.29. So far trading near its high for the week. Another name under accumulation here. These are the types of charts that I like to look at. Now it's a lot more, like I've been saying, it's a lot more than just bullish technicals and stocks under accumulation. I want to kind of look at recent earnings and sales growth. Is the company delivering really strong growth? And a lot of different things I look at: return on equity, profit margin. Want to make sure the whole ball of wax is there. So, but Hertz, a good technical setup here, breakout over 15.29, and also BE Aerospace. This is a name that I have owned in the past for the Ultimate Growth Stocks model portfolio. It's been a long time though, and I kind of lost track of it. But look at the move for BE Aerospace. We're talking at 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 straight gains for BE Aerospace. They make interior aircraft cabin products. Some of the refrigerators that the flight attendants push in the aisle. I believe they make seats, a whole bunch of aircraft interior cabin products, but a tremendous move for BE Aerospace. Breakout over 46.18. It's at 47.53. The rule I use, I don't like to chase a breakout more than 3 to 4% past the buy point. BE Aerospace might still be in range here, but after 9 straight days of gains for the stock, I'm not, don't want to chase it up here. Let it pull back, and if it keeps going, it can go up. It can go up without us. But you can see the market is dishing up some technical breakouts here. This is all good in my opinion. MasterCard. A little bit wary on MasterCard. You have a breakout today, decent volume. It looks like volume is going to be average, maybe a little bit above average. So that's barely decent, because at a breakout you want to see expanding volume. You want to see a stock trade at least double what it normally trades on an average day. But nice breakout for MasterCard. The issue, and I've mentioned this one in the past, but MasterCard to me looks like a late stage base. We're not talking a stock that's up 700, 800, 900, 1,000%, like a lot of other bull market leaders, but you can see its weekly chart here. It was a $200 stock near the end of 2011, and it has more than doubled right now, around 487.20. It is breaking out, but I'm going to take a pass on this one. I just the weekly chart to me looks like a late stage base, and I know breakouts from late stage bases can be prone to failure. So MasterCard having a good day today. But not only is it a late-stage base, but you look back in recent quarters for MasterCard, sales growth has been decelerating for several quarters in a row, something like 20 to 17 to 13 to 10 to 6, just decelerating sales growth. And when I'm buying a stock, I want to make sure that there's consistent earnings and sales growth, but decelerating sales growth is something I don't like to see. Now, the feather in MasterCard's cap is that it is an institutional quality stock. It does have good support out there, and you got a technical breakout today. So we'll go back to the daily chart for MasterCard, and stock is up 1.3% today to 487.72. But volume doesn't look to be all that great. So another decent chart out there. Really like the way that Salesforce.com is holding on to gains. You can see a gap up last week when they reported another great quarter of top line growth. This is really the cloud computing bellwether, one of the first to market, and company continues to execute, up $1.21 right now, 159.07, flirting with an upside breakout here. If new money comes in from the sideline, I think that Salesforce has the potential to be a nice market leader. So this is another good-looking stock. How about CHUY? You ever heard of this company, Chuy's Holdings? Chuy's Holdings came public in July. Earlier this year at $13 a share. It's trading at $34.36, and at one point today it hit a high of $26.49. Really made a nice move, but look at this, kind of an ugly day of price action now down 28 cents, 1.1% decline to $24.36. This looked like a breakout from a double bottom base. Now it's a failed breakout. Think about Chuy's recent IPO. Pretty good fundamentals. They operate Mexican Tex-Mex restaurants in Texas and the Southeast. Very small company, and I've been talking about this a lot because the small caps have been, they've been working pretty well today, but they're volatile. And this has a market cap of $415 million, so that's kind of right on the edge of micro cap, small cap. Good fundamentals, thinly traded though. Average daily volume of 120,000 shares in that area. So you had a good technical setup here. Good volume in the stock, but this is a heavy volume reversal, and all of a sudden its price action looks questionable, to say the least. But this is a company where growth prospects in the restaurant space, this is definitely one to watch. It's speculative, but sometimes these 400 million market cap companies, year or 2, 3 years down the line, all of a sudden they're $1 billion market cap, and they keep expanding, keep executing, delivering good solid earnings and sales growth, and then it's a $2 billion, $3 billion market cap company. So I think Chuy's has potential, just too small for my tastes right now. Another recent new issue I wanted to take a look at is Workday. Workday in after hours yesterday really looked like it was going to have a good day today. Shares right now down $1.43, 2.7% to 51.76. Workday, similar business to Salesforce, a cloud computing company. The gist behind cloud computing is that you don't buy software in packages anymore and put it into your computer. At least corporate America, what they do is they access this software over the internet. Software as a service. Salesforce provides it. Workday provides it, specifically human capital management software. And the company is headed up by former PeopleSoft executives David Duffield and Anil Bhusri. So there's good pedigree here. PeopleSoft, of course, a big market winner in the 80s and 90s. Workday lost 26 cents a share, but that was much better than the consensus estimate for a loss of 59 cents. Sales up was it 99%? I know their sales were 72.6 million. 72.6 million. Let me just say, I think it was up 99%. Yeah, pretty good growth. So Workday is selling a lot of product. I think the stock still has potential. You can see it's just setting up in a nice base here. I thought the results were going to be good enough to bring some buyers into the stock, but still the market uptrend that we're in right now, there are people have reasons to be skeptical about it. That's what I'll say. So it's not a sure thing that companies you think should be moving higher on earnings. There are still some sellers around, and that appears to be the case in Workday today. But I like this company's potential. I think if new money does start to come in from the sidelines with conviction, a name like Workday and Salesforce, for example, could work nicely. Stocks under 10. How about Coldwater Creek? We saw earnings from Coldwater Creek last night. They lost 45 cents a share, better than the consensus estimate for a loss of 75 cents. Coldwater making a big move today, up, 18%, 17.9% to $5.74. What do we got here? Sales were flat at $188.1 million, but that was about 7 or 8 million better than the consensus estimate. Mentioned that pending home sales, pretty good data today. Let's take a look at Beacon Roofing Supply. This is sort of an ancillary housing play. BECN is the ticker here. This stock is mostly unchanged on the day, down 25 cents to 31. Had been a pretty good performer. You can see firming up at its 50-day moving average for several weeks now. And so still holding above support. The earnings just kind of so-so, up 7% from a year ago to 60 cents a share. That was in line. Sales up 4%, $598 million. That was just maybe about $1 million and a half below expectations. But BECN, again, an ancillary housing play. They distribute roofing-related building materials in about 35, 40 states, something like that. So Cracker Barrel, CBRL. I know my, let's just take a look at Cracker Barrel. Tough day for Cracker Barrel, down $3.67, 5.6% decline to $61.43. Same store sales at Cracker Barrel up a respectable 3.3%. Earnings of $1.08, beat the consensus estimate by 2 cents a share. But it was basically flat growth from a year ago. Sales were up 5% to $627.5 million, a little bit below the consensus estimate of $630 million. So rough day for Cracker Barrel. And that's pretty much it on the earnings front. Let's check in on Research in Motion. This stock actually got an upgrade today from Goldman Sachs. Well, miracles never cease. Goldman upgraded the BlackBerry maker to buy from neutral, saying RIM, get this, will exceed street estimates over the next 4 quarters. So they're pretty optimistic about fundamentals here at RIM. Interesting day for the stock. It hits an intraday high of 12.30, up big percentage gain, but that gain has pretty much disappeared. It's now trading at $11.44, up 34 cents, 3.1% gain, but right at its session low. January 30th is the launch date for the new BlackBerry 10. So that's it on Research in Motion. All right, folks, when we come back, we're going to take a look at Ulta Beauty reporting earnings after the close today. We'll see how that stock is trading. Another stock that's made a huge late-stage run over the past 3 years. Looks very tired to me. We'll see what the company has to say after the close today. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. As we head into the close here, we see the NASDAQ up 20.5 points to 3,012, good for a 0.7% gain. Mentioned NASDAQ working on 8 gains out of the past 9 sessions. This 50-day moving average could be a short-term resistance level. It will take more upside volume, heavy volume behind gains to help the NASDAQ push through what could be a resistance level here, the 50-day moving average. See what that S&P 500 is doing. See if we're going to get a close near the high with this index as well. S&P 500, yeah, looking pretty good here, up 6.5 points to 1409. Haven't checked on volume in a little while, but let's see how volume is shaping up here. At one point, it was heavier on the NASDAQ, and yeah, it's still about 5 to 10% higher on the NASDAQ. Yesterday we saw 1.68 billion trades, so we could come in a little bit higher than that today. NYSE volume yesterday, 708 million, will come in very, very close to that, maybe just a tad higher. So this is what we want to see. We're still in the early stages of an uptrend here. We've had some mild professional selling in the market, but overall, the whole group of growth stocks that I cover for Ultimate Growth Stocks continue by and large to look pretty good. So I think there's reason to be optimistic that this rally could have some legs between now and the end of the year. So we'll hope for that. Ultimate Growth Stocks on the homepage of TFNN.com if you want to try 30 days free. This is an exciting time. The watch list is getting bigger. We're focused in on stocks that I think have the ability to lead. So if you want to see what stocks we're looking at here, check out 30 days free of Ultimate Growth Stocks right on the homepage of TFNN.com. And don't forget about the Tiger Dollar promotion as well. We do this every year around the holidays. Purchase Tiger Dollars. You can use Tiger Dollars to purchase products at TFNN.com. Save a lot of money doing it. You purchase Tiger Dollars and we'll donate up to 10% of your purchase price to the Salvation Army. So sign up by December 19th. Get a 25% bonus match on any amount over $500. You can get all the details, again, right on the homepage of TFNN.com. All right, Ulta Beauty. Not much in the way of earnings after the close, but Ulta is going to be reporting. This is a company that, as its name would indicate, operates beauty stores. Very, very well-run company here. But look at this initial resistance at the 50-day moving average, down $1.47, 1.6% to 92.72. The numbers for Ulta expected to be pretty good. Earnings of 56 cents a share. That's the consensus estimate. Would be up 33% from a year ago. Sales up 22% to $504 million. So we'll see what Ulta Beauty has to say after the close. And here's a recent new issue that I was watching at one point, but then sellers really came into it, and this still has a long way to go to build the right side of its base. But Five Below, this is a specialty retailer, came public in July at $17 a share, and you know what? It's trading at $31.40. So. But it was a $38 stock back in late September, early October. So it has corrected in price, working on a two-day winning streak, up 2.8% to $31.40, ahead of earnings after the close. Don't have estimate data, but this is a company that is expected to deliver strong growth for fiscal 2013 and 2014, with annual earnings up 63% in 13 and 39% in fiscal 2014. So we'll see what Five Below has to say after the close today. And then tomorrow we'll end with United Natural Foods, UNFI. This is a stock that's been hit hard by selling, down 1.3% ahead of the results, $52.08 last price for United Natural. Coming up next, the Tom O'Brien Show. We'll put the finishing touches on the week tomorrow with another edition of Breakout Investing at 3 p.m. Eastern. Enjoy the rest of the day, folks. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.